Good evening. Welcome to the ShadowTrader video weekly for Sunday, February 17th, 2013. We have a lot of mixed signals abounding right now in this market. I'm having the S&P here on a weekly just so we can start with the dominant trend channel that I've been talking about for a while, which has its peak in the 1540 to 1545 area here. We've been seeing a lot of consolidation in the markets over the last few sessions, pretty much the whole week. It was a very dull week where the markets didn't really do much. We're generally bullish into options expiry. We were bullish, but not all that bullish. You can see here clearly that the high in the markets was actually made on Wednesday. And since then, after that, the market just kind of churned for a couple of days and was not able to take out that high. So that is something that I'm noting going forward. The big question on everybody's mind, obviously, and mine as well, is, is this consolidation going to resolve itself to the upside or to the downside? I really have no idea. All we can do is kind of look at, different pieces of evidence and see, what's out there. But in basically a lot of the things that I'm looking at in terms of profile, in terms of chart patterns, is really just pointing, to either direction. I'll show you why there's some mixed signals here. That prior high that I was talking about is definitely something that I am carrying forward. As far as mixed signals here, let's talk about the strong stuff first. We can see clearly that the Russell is actually leading a breakout to the upside, but at the same time seems to be pretty overextended. I'll show you the TF futures here, which is the Russell futures. And if I put them on the weekly, even though they seem to be leading the markets to the upside, remember that I try to pay attention to areas where the futures or broad market, whatever you're measuring, gets overextended from the 20 MA. It's a very simple tool. Just use the 20 MA and see, when you spike up above it, you don't necessarily have to have a long-term correction, but there should be coming at least some pause. You can see here where you get overextended from the 20. At this level, you're very high, and then you pause. You have a down week. So here we're a little bit overextended, but the Russell definitely tends to be leading. The Dow suffered some weakness on Friday due to some Walmart sell-off, I believe, and also notice that even though the S&P that I just showed you first has a ways to go before its dominant channel resistance, right? The Dow is actually right there. We saw the high here, put it in the Dow this week, and the Dow is up against the channel resistance. So for everything out there that looks positive, such as the Russell breaking out and small caps leading, there's all these other things that are a drag on it. So there's really like a lot of mixed signals here that I'm seeing in terms of what the next move is going to be. It's either the fact that the market is pausing in this level for another move higher, and the S&P wants to move up to that resistance point, or it's going to possibly roll over a bit and get some selling. One thing also that I'm noticing as well is if you look at the dailies here, I find it interesting that a lot of the action here has been liquidation breaks to the downside, and I'll show you this on the profile in a second, in terms of selling in the S&P just kind of backing off intraday but then closing strong. We keep seeing that. But this is really only bullish if the market can eventually stage a new higher high. When you see these bottoming tail hammers like we have here on the right side of the screen, right? If these areas of the highs can't get taken out and taken out soon, I'm of the opinion that the constant testing of the lows here actually weakens these areas, and that there should be a larger break if these areas are taken out, especially given here how Thursday and Friday you can see the lows in the S&P are 1514, and then again at basically 1514 again. This is 1514.14, and the day before was 1514.02. So I want everybody to watch this level, which is going to be really key in the coming week. Looking at the profile, you'll notice that that same area is really important, and this is where again all these mixed signals seem to abound, because the market goes down and it comes underneath that key 1514 area, which you can see here is double point of control, right? We have fairest price to do business on February 8th, February 13th was the same, and then notice how all of this week, the 2 days after, the market finds support without probing too deep into that value area. Here you get excess to the downside in the profile, where you essentially go, deep enough that you would think there would be a stronger sell-off, but there's no acceptance, right? Because remember, there's acceptance and rejection in the markets, and this is definitely rejection when you have just a spike down here and then value and price close up higher. And then at the same time, in Friday's session, this is actually interesting because we came down and probed this level, and we didn't completely reject. Notice that this time the market spent a little bit more time down there and was a little more comfortable, and you had a little bit more value here where the profile was a little bit fatter. So all of these things are little things that I'm carrying forward. into the next week. We had an excess high here on the 13th. Not a very super meaningful excess, but at least, 3 or 4 TPO prints here to the upside that were singles. And remember, that high has failed to be taken out. So obviously, in the week to come, that is the key area that everybody's going to be looking at to see, can we take out the 1522.50 in the ES here, whatever this exact high is here. Notice that we came a little bit shy on Fridays. Value is building slowly higher. The points of control are migrating upwards. That is bullish. But at the same time, what's bearish, and again, tying in with this, with the whole, idea of all these mixed signals happening, even though you're getting a small, steady migration of the fairest price to do business higher, notice what's happening to value. Value is not really establishing higher, and value is continually overlapping. Here you had a clean break where value broke out of a 2-day balance and value established higher, and there was no overlap, and yet after that it's been 3 solid days of nothing but overlap, where you have value, market pushes a little bit higher, but value overlaps the prior day. A market here fails to go higher, value completely overlaps, so it's just a pause, more balance, and here again. So this is basically what's going on for the coming week. Just a lot of mixed signals here. I would say the key to next week's action, as I was saying, is going to be basically, moving above the balance of the lows here, where you see this low action or this high action. Obviously, that seems, pretty straightforward. Obviously, doesn't take too much analysis to figure that out, but that is the case. That's definitely pretty much all that's happening in this market. We're just in kind of a balancing state. Balance definitely leads to imbalance. I would say market internals are definitely going to tell us next week if it's going to be stronger or weaker, and that's the last piece of the puzzle that I'm going to leave you with, is the fact that when I look at all of my quad here in terms of U-vol, D-vol, this is the up volume, down volume, and advanced decline line mostly. Ticks move a little bit too fast, so I really don't, I don't pay too much attention to the ticks on the longer term. But what I'm doing is I'm just setting everything to an hourly, and I was seeing if it looked to me like there was any strength or deterioration in any of these internals over the 5-day period. And to me, there is a little bit. So again, it's just another thing to carry forward, and yet there's really no definitive answer here, meaning that there's nothing pointing here under the hood where you could definitely say, look, here's some serious divergence. This market really wants to crack lower, or here's some serious divergence, in internals or in the profile. This market really wants to crack higher. I think it's kind of mixed signals. So in the profile, what I'm noticing is you're seeing a little bit of deterioration in the breadth, certainly in the Wednesday, Thursday, Friday sessions. Here you have 213. This would be Wednesday. Notice that these highs here in the breadth didn't go as high, and then you had this deterioration on Friday. I think the breadth was pretty much mostly negative the whole day. Notice that, and yet the market was only down 1 point. The SPX was actually down 1.5 on Friday, closing at like 1519.79. So we're just moving a little bit lower here. Same thing with advanced decline line. The other thing, and again, I can't keep saying it enough, mixed signals. Friday was an options expiry day, so that could easily play into a lot of this. It's very possible that internals are not really showing their hands because you get a lot of pinning action on the Friday of options expiry. Plus, we're moving into a 3-day weekend. Monday is going to be a nicey holiday for President's Day. So again, it just adds to the mixed signals. So I would say, in closing, market is definitely in a low confidence environment. Short-term traders continue to rule. Overall volumes remain low. So basically, use caution. May not be too prudent to commit too heavy to new longs, as we are a little bit toppy here. If so, be careful. Use tight stops. Remember that the larger players, as I always say, they will use any type of a failed breakout to try to initiate a short position because they'll have a defined stop. You can also do the same thing. So watch if there's a failed breakout in the S&P over this level. For instance, if we cross over into the 1520s and then fall back very quickly into range, that could be a definite point to initiate a short position because, like I was saying, you would have a defined stop over that failed high. And then, of course, momentum to the downside in the market would really only come if those double bottom lows were taken out that we saw on Thursday, Friday. That those probes into that area, I think, are definitely weakening that area. And the fact that we do have 2 hammers to show for there, if we were to violate the lows of those hammers, I think that would definitely bring in some selling momentum. Okay, so that's all I have for this week. Remember, Monday is a market holiday. I'll be back on the blog on Tuesday morning with you guys. Seminar with James Dalton that I'm really excited about. He's coming on the ShadowTrader show Friday, March 1st. It's going to be 9:15 a.m. He's going to spend the whole morning with us. It's going to be awesome. It's going to be a live market seminar, very dynamic. Markets are going to be moving, talking about ES, NQ, YM, probably gold, some other markets that he looks at very closely, so we're excited about that. Also, if you're watching this video in the ShadowTrader weekend update, as I know that most of you are, you want to definitely click on the What's New at ShadowTrader.net section on the left-hand side of your weekend update, and it'll scroll you down to the What's New section, and there's a link there where you can sign up for a Dalton seminar that's going to be in Chicago in late April, and there's a special $200 discount for ShadowTrader people just on that link. So the link is right there. It's a great value. It's a 3-day thing. I've been to 2 of these, spent a lot of time with this gentleman. If you're interested at all in this stuff, if market profile, is something that you think you want to make a bigger part of your trading, I definitely implore you, it will be worth your time to make the investment. Go out to Chicago in April and check out James Dalton. All right? That's all I have for today on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania. I wish you good trading and good night.